All right, thank you for tuning in to another edition of the Vulcan Report. I want to first of all thank everybody who showed up to the Wide Awake radio show last night with Charlie McGrath. We both really appreciate all of your support. Coming out, and those of you who participated in the live chat, awesome, great to see you guys. For those of you who don't know anything about it, you just simply go to the Wide Awake News website, and on Thursdays around 8 p.m. Eastern Standard Time is when the show starts, and I'm usually there on Thursdays, and we discuss what's been going on in the markets for the week and looking to the week ahead. So we had another great show, and for those of you who missed it, you do have the ability to go to wideawakenews.com and click on the archive section, and you can listen to the past broadcasts that way. So great show, and glad everyone could be there. All right, let's jump right into it. As you know, the non-farm payrolls fell 131,000 in July, and the jobless rate now holds at 9.5%. Unfortunately, the U.S. economy shed more jobs than expected in July, while the unemployment rate is holding steady at 9.5%, and that's a further sign that the economic recovery may be losing momentum. And as you've heard me say before, there is no economic recovery, and there never was one. That was just media hype and spin. The non-farm payrolls fell by 131,000 last month, as the rise in the private sector employment was not enough to make up for the government jobs that were lost. And the U.S. Labor Department has been, playing with these numbers to make it seem a little bit different than what it really is. They claim that only 71,000 private sector jobs were added last month, while 143,000 temporary workers on the 2010 census were let go. Now, I know you guys have heard about the shenanigans with the census worker thing, how they lay people off and bring them back, and they do what they can to help massage the numbers that are already unreliable anyway, and how, they always go back and revise the numbers after the fact. Okay, so who's to say that the revision that won't come out will say, I'm sorry, it wasn't 131,000, it was, 800,000. We don't know. All right, so you really can't trust the numbers. All you can do is look at reality and look around you. There are no jobs. Okay, so that's it in a nutshell. All right, I need to go over the report with you. For those of you who are new and those of you who are been with us for a while, I know it's a mixed audience. Some people are seasoned traders, other people are not. So forgive me if I'm talking to you like you're an idiot, because I know you're not. But I do have to explain how everything works. So please bear with me. All right. One thing I want to say is that when I do these reports, I want you to be able to take advantage of me doing it. That's why I spend my time doing it. And I want you to be able to use this and know how to use it and make money. I mean, that's why I'm doing it. And that's why it's free. I'm not charging you money for this. It's free. I'm trying to help you out. Like for instance, this first one that's highlighted is the Australian dollar. It says buy today at 91.76 with a stop loss at 91.12. Okay, here's how you manage the trade. Remember, we always enter the market with stop limits, and we exit the market with stop limits. Our stop losses are always put in as GTCs, good till cancel stop limit orders. Always, 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 always. Okay? If you put this trade on right now and it doesn't get filled come time, getting close to 4 o'clock, you cancel the order. You just cancel it. It's done. It didn't get filled today. Patience is so important in this business. When you're placing trades, there are going to be days where your trades don't get filled. Maybe nothing on this list will get filled. Okay, that's why it's called in play. These are the securities that are in play for the day, that are poised to break out or break down. And we just want to be in the market when it does. Now, if the market doesn't get to our entry price, then that means the market wasn't ready to do what we expected it would do. And we don't want to be in it. Example, with this Australian dollar, this is Forex, if it doesn't fill this trade today and decides it wants to actually sell off, that's great. You don't want to be long in a market that's selling off. And we don't have a good sell signal, so no matter how much it pulls back, it didn't generate a sell signal, or I would have told you we're going to buy it or we're going to sell it. Without getting too complicated and complex, just understand that the system is designed to get you in the market on the right side of the market where the nice moves are expected to happen, okay? All right, quick review. The pulse wave breakout means that if there's a 1 in checked here, it just means that this particular security is poised for a huge move. So if you're filled, expect a nice ride out of it, okay? Same thing with the pulse wave breakdown. If that's a 1 check there, then that's what we're expecting, something really powerful to happen. If it's just a regular breakout long, a regular breakout short, with a 1 in it, like 1 here, and then there's a 1 here on this one, all that simply means is that we call it an intraday play, meaning that you might want to consider taking profit on the close. All right? Or even if it gives you something significant intraday, just go ahead and get out. Just go ahead and take your profit, okay? Not saying you can't hold these positions overnight, because you can. Let me show you how to do that, all right? Let's use this Australia dollar as a example, all right? I'm going to bring it up for you. Take a look at how this has been moving throughout the week. That'll kind of help you out to understand, the rhyme or reason behind some of this stuff, okay? All right. If you can see this, I don't know if I can make this any wider. No, I can't. I apologize for that. Let's see if I can bring it in a little bit more, just so I can squeeze more data in here. Okay. This should help. All right, here we go. Okay, this here is a look back at the signals that we got starting from last Friday, okay? All right, on the close of last Friday, we had nothing. All right, coming into Monday. By Monday's close, we did have a breakout signal to go long at 91.50 with the stop at 90.37 in the Australian dollar, okay? As you can see, the following day, you did not get filled. You hit a high of 91.49. So that trade would have been canceled. All right, coming in on Tuesday. Now you have on Tuesday's close another buy signal at 91.53. Well, what happened the next day? As you can see right here, we hit a high of 91.82. Now you could have moved your stop. This is how you manage the trade. You could at minimum, you could move your stop to right below that low of that session, like here, to trail it. That way, you're trying to allow the market to move and to ebb and flow a little bit. All right. But what you want to do is, I like moving my stops to at least break even. So what I try to do is, if you were filled here at 91.53, you probably would have moved your stop to at least lock in any profits and commissions and everything for break even. And that's probably what I would have did. So let's just say you put it to 91.55 or something. All right. Well, here we pulled back, so you'd have been stopped out, but not at a loss. Does that make sense? So that's how you trail your positions with these trades. So either you take profit intraday, like here, you could have, because you got filled at 53, you hit a high of 82. You could have locked in some, maybe 10, 20 pips, whatever, and just got out of it. So that's what I mean by managing the trade. All right. Any questions? Just go ahead and PM me. Send me a private message, and I'll walk you through it. All right. Anyway, let's move on. Crude oil futures for Friday, going long at 82.19 with a stop at 82.06. As you notice, we have a pulse wave possibility here. So if it's filled, you may be in for a really nice ride on this one. Okay. So that's a long at 82.19 with a stop at 82.06 on the crude oil futures, ticker symbol CL. All right, British pound Forex. Again, expecting a pulse wave. No intraday signal here. So the entry point is 159.28 to go long with a stop at 158.14. We might not get here. All right, but just watch and see what happens. All right. Going into the commodities now, ticker symbol MOO ETF.